Hi everyone, it's Liz Tolentino with Keller Williams VIP Properties in Valencia.
Keith Renno, Wintrust Mortgage, welcome.
Hi, I hope all of you are staying dry out there and safe, driving safe. So Keith, today let's take a question that I actually got from a good friend on Instagram, and she has questioned, these questions actually come up fairly often for you and me. Mm-hmm. So we figured we share the answers to these questions. So thank you, Delis, for asking these questions. You are the star of our show today.
There you go.
So here we go. All right. So she said, hey, Liz, how are you? I had a few questions for you in regards to buying a condo or townhome. Well, basically 3 questions. What does your yearly income have to be? So Keith, if somebody wants to buy a condo or a townhome or just a home in general, what does their yearly income have to be?
Great question. So can't give a specific number because it would depend on the price and how the amount of the HOA, the homeowners association dues in a particular community, and then what other obligations a customer may have on their credit report. So in general, we will go off of gross income. So that's the amount that someone is typically earning before taxes or medical expenses, or maybe adding to your 401k is taken out. So we go off of the gross income.
Sure.
And in general, lending guidelines will allow that gross income to be about 50% or your debts to be about 50% of that income, excuse me.
Yeah.
So to give a quick example, if you have, say, a monthly gross income of $6,000, your overall debts, so including any payments that are going to show on your credit report, and then the payment that we'd be looking at for the mortgage, tax, insurance, HOA all included, would need to be within 50%, or say $3,000 in this example.
Right.
So how we were talking about a little earlier, where we had the borrower making $100,000 with maybe some higher liabilities, a few auto payments or credit card debt, student loans. Compare that person to maybe making not quite as much.
Somebody making a modest, salary or income of, not near, 6 figures.
Yeah.
But with no debts.
Yeah, but with no debts and qualifying for as much or maybe more than that individual that is making the 6-figure income but has some higher liabilities and obligations. So not a straightforward answer. There's not kind of just one number as far as the income you need to make, but in terms of the ratios, about half of your debts for that gross income.
And I think it's important to remember that with all things in real estate, one size does not fit all. So for example, different incomes can qualify for different, even a higher income may not be able to qualify for a payment that somebody making a modest income may be able to qualify for, because that person maybe has less liabilities, meaning less payments, less debt on their credit. And so I guess that brings us to the next point, which is what percentage as a down payment does somebody have to purchase a condo or a townhome or a home?
Great question. All right. So 3 to 5% down with conventional financing, and folks, if their credit's typically in a pretty good situation, want to target a conventional loan. Conventional financing, 3% down, and that's for a loan amount as high as $484,000 in Los Angeles County, and then as little as 5% down for a loan amount as high as $726,000 in Los Angeles County. And
if you guys want to know why we're citing these limits in LA County, we did do a video on the conforming loan limits and how that changed recently. So it's allowing people in LA County to be able to afford a little bit more as far, and be able to put down either 3% or 5% down. Now, again, the answer to that question is how much down payment does someone need? Well, it really depends on their personal financial situation. And so that's why it's so important to kind of sit down with us, whether it's through, through a phone call or face-to-face, so that we can go over income, maybe savings and down payment. And then, of course, then she also asked, what is the minimum credit score that somebody needs in order to qualify to purchase a condo, a townhome, or a home?
Yeah, great question. So you'll hear lenders advertise anywhere from maybe as low as 580 to 620. Our mid-credit score is typically 600, so right around 600. But some of the down payment or closing cost assistance, and kind of going back to that second question, so there are down payment and closing cost assistance products available and out there.
There are.
So for an example, you can have someone buying around a $500,000 home using, say, a down payment closing cost assistance product, and maybe only coming in with a few $1,000s, and if they get a seller credit, potentially they don't have to come in with any funds out of pocket.
Exactly.
So a lot of opportunity there.
Yes.
For those programs, the minimum credit score starts at 640. So typically 640 or higher will have some more opportunity out there as far as products and programs.
Yeah, and I've also seen some lenders advertise something as low as 580. Now, what's your take on that? What's your take on that? Those ads, and are they misleading? Are they real? What's going on with that?
Sure. So typically in this market below 600, it's a real small window and a real narrow window in terms of guidelines and qualifications. So generally, if someone has a credit score below 600, they probably don't meet the criteria that would be necessary for that 580. We can provide financing situation. But in something we were talking about earlier, it's never too early, and it's always a good idea to know your options and have your credit ran by a lender. And that lender should be able to share with you where you stand now and perhaps some items or some actions that you can take to bring your credit score up or maybe put you in a slightly better position. Yeah,
because it does, I know for a fact that I've had conversations with people that I know want to buy, but they see fixing their credit or working on their credit as a huge daunting task. And then I see them come here, meet with you, go over their credit, and you actually are able to provide them with some really good tips on how to very quickly get their credit to a point where they can buy within months after our initial consultation.
Yeah, and we've had a few folks even sooner. Myself, when I run someone's credit report, now we have a lot of resources and tools that allows us to run some analyzers if certain actions are taken, how that might affect their credit score. So again, never too early. It's always good to know the options, and sometimes it's really beneficial to run the credit early. So if there's an action item that needs to happen, or sometimes there's an item on someone's credit that they might not even be aware of and they need to dispute and get it resolved. So it's better to know early, have time to address potentially a situation or give yourself the opportunity to be in a better position and know what your options are.
Exactly. And so Denise, I hope you find this video super helpful. I know that these questions come up all the time, and it's something that is on everybody's brain. Hey, what does my income have to be? What's the down payment have to be? What is the minimum credit score? And so while there's not a uniform answer to those questions, what we can tell you is that a consultation or going to a real professional to get the answer to these questions is the right thing to do.
Yeah, and I would say more times than not, folks are pleasantly surprised, or just surprised in general as far as the opportunity out there, or maybe the time frame that they were thinking they would need to wait a year and they could do something in 3 to 6 months.
Exactly.
Yeah.
Exactly. And so you don't really get that anywhere. You're not going to get that from a screen on the computer. You're not going to get that from an Instagram account. You really need to reach out to professionals who can guide you and who can strategize with you so that you can meet your goals. And so that you can prepare yourself for those plans of possibly becoming a homeowner in the future.
Absolutely.
Yeah, all right. Well, of course, those professionals can be me and Keith. And of course, if there are any questions, feel free to message me your questions. We can get you the answers on these videos. That's what they're for. We're here for you to provide you information. And have a great day. Stay safe out there.
Yeah,
Thank you.
Thank you.
Bye.